Yeah, perfect. Just 1 minute. Perfect. Perfect, guys. And I think everything is clear. Yes. Now let's proceed discussing about the preparation strategy for income tax, as well as what are the steps to solve total income problem. You know, you solve hundreds of questions, doesn't matter. If you do not understand these steps correctly, what are the steps, especially those of you who are repeaters, who already gave Jan exam and once again writing May exam, there is a huge difference between Jan exam and May exam, because there is a change in the financial year. Those of you who are writing for the first time May exam, who are first time directly listened classes as per new ICS study material, or who enrolled into our exam oriented classes, all that, okay, for you need not worry. Like those who already wrote Jan exam, somehow it was not successful, once again you're writing May exams, now you need to have so many checkpoints. And normally for when you're solving total income problem, there are so many checkpoints, because that's a 15 marks question here. Okay, but before that, what is the preparation strategy for income tax? And not only income tax, what is the preparation strategy for GST also? Guys, simple solution: surrender to our tax marathon. Just surrender to our tax marathon. For example, just a minute, I'll just show you. You just open this YouTube channel, see Harsha. My YouTube channel is there, right? Just 1 minute. Yes, 1 minute. Yeah, you open CA Harsha YouTube channel. Inside that, open the playlist. Open the playlist. Here you can see day before exam tax revision. Here first playlist you will find. So inside this we have already given, income tax part 1 marathon, part 2 marathon, GST part 1 marathon, part 2 marathon. All the marathons we have uploaded here. You can simply surrender to this marathon just to watch this marathon. Trust me guys, in this marathon itself, most of the adjustments we explained, how different questions will come. Apart from that, I will also give few videos on different tax rates in capital gains, different dates in capital gains, like that. Anyhow, right now I'm going to brush up all that. There are major amendments. What are all the major amendments happened? Especially these are the amendments applicable for the first time for May 25 exam. That also I'm going to talk about. TDS amendments, income from other sources, capital gains major amendment, PGBP amendment, basic concepts. Especially most important is basic concepts. Why? Because in every problem this will be directly or indirectly be tested. Basic concepts, the weightage is 10 marks approximately. So typically every chapter is important in income tax. That's why I request you to watch this revision class. Okay, fine. But first finish this. Once you finish this particular thing, you will understand everything. Yeah, just a minute. I hope everything is proper. Just 1 minute. Let me check it out once. I think there is some small confusion. Yeah, perfect. I think everything is going smooth. Yes. Sorry for the interruption, because I just have to check whether live is going properly or not. Yeah, fine. Yeah, perfect. Perfect. You people can reply me. Okay. Yeah. So what is the preparation strategy? I already told, just follow whatever we have discussed in the marathon. Very simple. You will very simple. Every chapter is important guys in income tax. Okay, so in the same order, because in income tax and GST, you don't even have the flexibility to start with some chapter randomly. No, you have to revise in a order in which we discussed in the marathon. That's the best order. Now let us now discuss 50 15 marks total income problem. How to solve this 15 marks total income problem? Like, many students will be focusing on solving many problems, but when it comes to exam, they are unable to score full marks in the total income. There are many reasons. There are so many checkpoints in total income. What are the checkpoints? First and foremost important thing, for May 25 exams, Finance Act number 2 2024 is applicable. First, mark this point. Exam questions, the questions will be asked based on relevant previous year 24-25, where assessment year is 25-26. Whereas in Jan 25 exams, the previous year is 23-24, assessment year 24-25. Whereas now the previous year is 24-25, assessment year 25-26. The first thing that you should identify in total income solving is whether the SSC is following optional tax regime or default tax regime. The question they'll give you, first identify which regime they are following, optional or default. Accordingly, in default tax regime, so many deductions and exemptions will not be there. Okay, so allowances in salaries, for example, this is one confusing topic where many students confuse allowances in income from salaries. Simple point I'll tell you. Allowances for incomes in income from salary. SSCs, like under salaries income, the incomes are two types. Broadly, the incomes are two types. Okay, monetary, non-monetary. Monetary, non-monetary. All non-monetary benefits are called as perquisites. Remember, perquisite can be again non-monetary, non-monetary, but non-monetary are mostly perquisites in nature. Again, monetary, you have two types: basic salary, allowances, and reimbursement. Reimbursement is also treated as perquisite. Mostly reimbursement is also treated as perquisite. Allowances, you have many allowances, yes or no? Now, what is the allowance related taxation? Allowances are again two types. 10 subsection 14 that talks about allowances two types. One, allowances were given for personal purpose, allowances given for official purpose. Remember, this official allowances are broadly two types. Again, official purpose allowances are categorized into two types: helper allowance, research allowance. Okay, and whereas here traveling allowance, conveyance allowance, daily allowance. Okay, helper allowance, research allowance, and I think there is another allowance called servant allowance. Yeah, helper allowance, research allowance, and servant allowance. Okay, not just that. Just 1 minute, I will show you that point directly, because I have given clearly. There are two types of official allowances. So 45. Just let me go directly to this. Yes, you can see here. You can see uniform allowance. Uniform allowance, helper allowance, research allowance, uniform allowance. The second type of official allowance is traveling allowance, daily allowance, conveyance allowance. So helper allowance, research allowance, uniform allowance, this is official purpose only. Even this is also official purpose. Now you see this one, default tax regime, optional tax regime, doesn't matter. Whatever the allowance received by the employee, that is exempt. That is exempt to the extent spent. You see, traveling allowance, daily allowance, conveyance, exempt under both regimes to the extent spent for official purposes. Whereas helper allowance and research allowance, uniform allowance, fully taxable under default tax regime. Whereas exempted to the extent spent for official purposes. In case of optional tax regime, exemption is given for whatever the amount spent. So in both the cases, in both the categories of official allowances, traveling allowance, daily allowance, conveyance allowance, they are exempted straight away under both the regimes. Okay, helper allowance, both are exempt. Both the categories of allowances are exempt under optional tax regime to the extent spent. Whereas helper allowance, research allowance, uniform allowance is fully taxable under default tax regime. This is point number one. Then again, coming back. Okay, so again, that is one confusing point where many students will have with respect to income from salaries, allowances topic. So that's the reason I just want to touch that. Okay, next. Yeah, somebody is asking, Anjanil is asking, what are the important rare adjustments in income tax, which we already explained in marathon at many places. Okay, it's not like at one place I can't consolidate. There are so many observations we told you. Just watch the marathon, you will understand. Next, major amendments. What happened? Basics, default tax regime, tax rates have been changed. In January exam, under default tax regime, for previous year 23-24, assessment year 24-25, the tax rates are like 3 to 6, 0 to 3 lakh, 3 to 6 lakh, 6 to 9, 9 to 12, like that. But now, under new tax regime, default tax regime, the tax rates are different. You see, I will show you. So under default tax regime, right now the tax rates are different. Here itself it is there. Yeah, this is optional tax regime. Yeah, here above it will be there. So 0 to 3, now it is 3 to 7 lakhs here. Up to 3 lakhs nil, we all know. Now 3 to 7 lakhs, the tax rate is 5%. Earlier, no, old limit is 6 man. Please remember that. Whereas now the new limit is what? 3 to 7 lakhs, the tax rate is 5%. 7 lakhs to 10 lakhs. If the SS is having income between 7 to 10, the tax rate is 10. 10 to 12, only 2 lakhs slab here. This is only a 2 lakhs slab, not a 3 lakhs slab. 15%. 12 to 15, 20%. Above 15, straight away 30%. This is the tax rate which is changed in default tax regime. Only tax rates have been changed, no other rate. Further, 87-year rebate is also changed. Under default tax regime, the rebate is 25,000 flat. Of course, I think that is the same amendment which is there for January. There is no change in rebate specifically for May 25 exam as such. There is no change. Yeah, that's it. So main tax rates have been changed, and I already discussed it right now. The second major amendment is in PGBP. 40 subsection B. There is a 40 subsection B. Firms related partnership firms. They can pay remuneration to working partner. They can pay remuneration to working partner. Yeah, fine. So remuneration to working partner. So firms are paying some remuneration to working partner, right? The remuneration eligibility limits have been changed. Earlier, no, like I will show you straight away that PGBP point also. For example, I'll directly go to PGBP point. Just in our index it is okay, it's okay. 100, come to page number 100. So somewhere here 40 subsection B will be there. Yes, here it is there. How to calculate income of the partnership firm. Suppose if the SSE is a partnership firm, how to calculate computation of book profit and income of the firm. Many students will have confusion in the book profit point. Many students, how to compute book profit, there are many confusion. First, calculate income from PGBP. Calculate income from PGBP. How to calculate income from PGBP? In the problem, they'll give you net profit. Add back disallowances. Reduce any additional deductions and all. Reduce P&L item credits to total income, which are not taxable under PGBP. Reduce them also. So reduce all that. Then you get income from PGBP of the firm. But don't reduce interest paid to partner, remuneration paid to partner. So compute profit of the firm. Compute profit of the firm before allowing interest, before allowing remuneration paid to partners. Okay, so first compute that. Whereas you will reduce all other deductions when you are computing this profit. Deduct all 30 to 37 unabsorbed depreciation also you reduce, disallowances and all you apply. Compute income of the firm, income from PGBP compute. Now again, by the way, when you are computing, if at all in the P&L account, interest paid to partner is debited, remuneration paid to partner, working or non-working, forget about it, add back everything. Income of the firm you computed. First, what you should reduce? Interest on capital paid to partner. So to the partner, some interest the firm is paying, that interest you should reduce. How much? Maximum 12% per annum only you will reduce. Then from the PGBP income, if you reduce interest up to 12% per annum, what you will get is called as book profit. This is book profit. From book profit, you need to reduce remuneration paid to working partner. For that, you need to apply working note 2. You see, the same format you can follow in exam also. Okay, remuneration paid to partner. Once you reduce remuneration, which is calculated as per working note, then what you will get is income of the firm. On this only, flat 30% tax rate will come. After that, if any amount is there, that will be distributed between the partner. And 10 subsection 2A, share of profit received by partner from partnership firm is exempted. That we already know. Now, computation of maximum remuneration allowed per partner. First, identify actual remuneration paid to working partner here. Identify that working partner remuneration. Yes, sir. Identified, sir. In the problem, some 5 lakhs is given. Now, maximum remuneration allowed compute. Here, there is an amendment. Earlier, 3 lakh, 1.5 lakh. So, here the limits will be 3 lakhs. Up to 3 lakh worth of book profit. 1.5 lakh or 90%, whichever is higher, like that is there. Now that limits have been doubled. Now the limit is up to 6 lakhs worth of book profit. Higher of 3 lakhs or 90%, whichever is higher, plus on the balance book profit 60%, you will get eligible remuneration. Now, given remuneration actual how much, eligible remuneration how much, whichever is lower, that is the actual maximum remuneration allowed, whichever is lower, that you will reduce here. Then you will get income of the firm. That's it. Now this is how income of the firm has to be calculated. Sometimes in exam they will also ask you one more thing. How much is taxable in the hands of the partner? Many students here, they will have a confusion. Partner, how much he received from the firm, that much is not taxable. How much deduction firm got, that much only taxable in the hands of the partner. For example, you know, the firm paid 5 lakhs to working partner, some 3 lakhs to non-working partner. Paid. Deduction, no, firm got 4 lakhs for working partner, towards non-working partner 0 deduction. Now how much is taxable in the hands of the partners? Working partners 4 lakhs is taxable because firm got deduction 4 lakhs. How much shown as expenditure in the firm? 4 lakhs only. So that much only income. For firm 4 lakhs expenditure means as per income tax law. For the other party income is how much? 4 lakhs only. Non-working partners, they received 3 lakhs remuneration, but did firm got deduction? 0. Therefore non-working partner taxable amount is 0. In the hands of the partner, this is the tax treatment. Very simple. Are you clear? By the way, in the hands of the partner, if some amount is taxable for amount received from partnership firm, where it is taxable? PGBP head of income is only it is taxable. It is taxable under PGBP head of income. That's it. So that's regarding 40B amendment here. Then coming to capital gains. Pass. There are so many amendments in capital gains. For example, 50AA with effect from 23rd July. Okay, unlisted debentures, they are all added in the 50AA purview. If you are transferring any unlisted debentures, okay, if on or after 23rd July. By the way, the gain or loss is always short term. Anyhow, I have covered this point in already the marathon. For capital gains, I will exclusively do tomorrow one video. For capital gains exclusively I will do tomorrow one video. I will schedule that live also tomorrow. Okay, so please watch that video. In capital gains, what are the key amendments? I will make a video tomorrow. Just follow that video. Okay, now already I have covered this. By the way, this already covered in marathon. You just go to capital gain time stop, it is covered already. Now date of transfer 23rd July, on or after 23rd July, depending upon that there are so many amendments happen. So date of transfer means what? You know, actual sale date or date of destruction in case of 45 subsection 1A, date of conversion in case of conversion of capital asset to stock in trade, date of compulsory acquisition in case of compulsory acquisition. This is nothing but date of transfer. So 23rd, suppose if in exam they gave you conversion of capital asset to stock in trade, if the conversion date is on or after 23rd July, the tax rate is different, indexation is not available. If the conversion date is before 23rd July, indexation is available, tax rate is different in case of long term. Are you getting it? So conversion, date of transfer, date of destruction, date of conversion, date of compulsory acquisition, they are all nothing but transfer dates. They are all nothing but transfer dates. If transfer date is on or after 23rd July, the tax consequence is different. If transfer date is before 23rd July, the tax consequence is different. Yeah, next up, IFOS, income from other sources. One amendment is there. In capital gains also corresponding amendment is there. In capital gains also section 46A, if section 46A, there is, section 46, there is an amendment regarding buyback of, equity shares. So corresponding amendment, buyback by domestic company on equity shares buyback. Whatever amount a shareholder is getting on buyback of equity shares by domestic company, listed or unlisted or doesn't matter. Entire amount received by shareholder on buyback is fully treated as dividend income. This point also I covered in the marathon here. Please go through that marathon. Once you finish this video, you just go through that marathon. Then TDS TCS rates. At so many sections, wherever TDS rate is 5%, it is reduced to 2%. The TDS rate is reduced to 2%. Even here, if you see TDS, no. Here I will just to show you straight away TDS point. Okay. Now here you see TDS. Here itself I have given. You see here, you can see here. I'm just showing you. These are the 8 sections combo. I have given at the beginning of the TDS chart itself how to remember. You see 194DA, 194G, 194H, 194M, 194IB, 5 sections. TDS rate up to 30th September is 5%. From 1st October TDS rate is 2%. Then again I have given some more. That's it. So I have given at the beginning of the TDS timestamp. You just select TDS timestamp. At the beginning itself I spoke about what are all the amendments. So same way I spoke even for capital gains what are all amendments in part 1. You just open this marathon. At the beginning of the capital gains itself, I spoke where and all amendments happened, all that. So be careful here. Okay, so I spoke about all the amendments, everything. So just watch that particular marathon, you will get fantastic clarity here. Okay, since it is already available, I'm not repeating once again, that's the only reason. Next. Now, so I think I covered about the Finance Act applicable, the previous year applicable, optional tax or default tax, allowances in income from salary. The confusing point I told, major amendments where and all happened also I spoke. That's it. Now, when you're applying set off and carry forward, once again you should observe, when you're computing gross total income, don't total blindly. Once again, see optional tax regime and default tax, because in case of default tax regime, house property loss you can't set off with other heads of income. Remember this point. In case of optional tax regime, house property loss you can set off up to 2 lakhs limit only. So that point also you should remember carefully. Then once you apply set off, you will come to gross total income stage. Then you will come to what stage? Gross total income stage. Okay, that's what yeah, Hussein, I'm explaining that. So gross total income stage. Now once you arrive gross total income, you will compute chapter 6A deductions. By the way, chapter 6A deductions under optional tax regime, you will get all deductions. Under default tax regime, you will not get chapter 6A except the following: 80 CCD subsection 2, 80 CCH subsection 2 and 80 JJAA. Only these 3 deductions you will get under chapter 6A under default tax regime. Correct? Which is also covered in my marathon. So first identify what is the total chapter 6A. Directly don't reduce, never, because gross total income will have 2 types of incomes: special incomes, normal incomes. For example, gross total income is 7 lakhs in the given question. Normal income is 1 lakh, special income is 6 lakhs. Special incomes means what? Lottery, 112A, 111A, 112. That's it. Normal short-term capital gain is normal income only. So 1 lakh is normal income. For example, normal short-term capital gain, not a 111A. That is also normal income. Now, my chapter 6A answer, actually I got 3 lakhs. But my normal income is 1 lakh. Total of chapter 6A deduction cannot exceed normal income. Therefore, total chapter 6A deduction will be 1 lakh only. MCQ might come here. Be careful. Then you will have total income 6 lakhs. On this, you need to compute tax. When you are computing tax, there is a format. Tax computation format is given. I have given this in my book also. In my book also, I have given tax computation format. You see how to compute tax. First, always compute basic tax. How to compute this basic tax? That's what again I'm going to discuss. When you're computing tax, identify is there agriculture income. When you're computing tax, once again go back and identify is there an agriculture income or not. Check out. Yes, if agriculture income is there, be careful. Aggregation concept is applicable. If agriculture income is more than 5,000 and SSC is already having income more than basic exemption limit, aggregation concept is applicable. First, total income plus agriculture income is equal to how much income. On that, apply tax rates and then compute. Step 2, basic exemption limit plus agriculture income is equal to revised income. On that, calculate tax. Step 1 minus step 2 is equal to the final basic tax, and that basic tax is what here you need to put. If agriculture income is there, then add surcharge. Surcharge related discussion and all I already covered in this revision class. So surcharge, depending upon the total income level, surcharge rate will vary. And you know very well, dividend long-term capital gain 112A, 112A, maximum surcharge rate is 15%. But remember here, lottery is not covered. On lottery, maximum surcharge rate can be 37% in optional tax regime. Maximum surcharge rate can be 25% in optional tax regime. Even that problem, that entire complexity also explained in the revision class. In that marathon class, I've even covered that. And when you're computing basic tax, be careful about unavailed basic exemption limit, unavailed basic exemption, unutilized basic exemption limit. For example, I am computing tax. Okay, my total income is less than basic exemption limit. Normal incomes, especially my normal incomes are less than basic exemption limit. That unutilized portion is there, right? You can set off against 112, 111A and 112A. You can set off against 112, 111A and 112A. You know what? 112 tax rate before 23rd July. If the transfer date is before 23rd July, 112 tax rate is 20%. If the transfer date is on or after 23rd July, 112 tax rate is 12.5%. Same way, 112A, in the entire year, if at all you're transferring listed equity shares, equity oriented mutual fund and units of business trust, STD paid at the time of sale, especially for equity shares, STD paid at the time of purchase also. If that is the case, the tax rate is 10% before 23rd July, the tax rate is 12.5% on or after 23rd July. But remember, on a FIFO basis, up to 1.25 lakh, there is no tax at all. Getting it? Now when you are setting off unavailed basic exemption, some students will have a doubt, before reducing 1.25 lakh should I apply unutilized basic exemption setup, or after? Remember, this is final tax computation stage. So unavailed basic exemption, very simple, very simple. Suppose I am having totally 4 lakhs income. This 4 lakhs income breakup, if you see, 1 lakh is normal income, 3 lakhs is 112A capital gain, for example. Now my basic exemption limit applicable is 3 lakhs. So 1 lakh is only available normal income, 2 lakhs is normal. 2 lakhs, 1 lakh is available normal income, 3 lakhs is basic exemption. Therefore, unutilized basic exemption limit is what? 2 lakhs. Now, whereas my 112A income is how much? 3 lakh. So I will set off now. Now balance income is 1 lakh. Out of the balance income up to 1.25 lakh, zero tax, right? Yes. So first you should apply basic exemption limit set off against the gross income. Then only you will apply 1.25 lakh limit set off. That's it. Be careful. Next. So that's about unutilized basic exemption limit. That's about unutilized basic exemption. And finally, when you're computing tax, first add surcharge if applicable, then you will get subtotal, then reduce either rebate or relief depending upon the circumstance. Then what you will get is subtotal, then add education cess, then you will get gross tax liability. Sometimes in exam they don't ask you gross tax liability, they will ask you tax payable amount. Tax payable amount is what? Gross total income minus TDS or TCS minus advance tax. If you reduce, then what you will get is called as tax payable amount. That's it. So these are the steps that you should remember pakka in gross total income computation. These are the checkpoints in total income. So if you are confident on all these checkpoints, that's it, you are done. So these are the checkpoints you should remember in total income computation. That's it, done. With this particular live, I'm stopping. Right now what you need to do, open that marathon and watch. What are all I'm going to do further, which videos I'm going to do further. So I am going to do capital gains, rates and dates concept. Rates and dates concept. What are the rates in capital gains? What are the dates in capital gains? The crux point I will talk. I will, even if possible, important adjustments I will talk. There are some key adjustments in income tax, that also I will talk. These two I will upload preferably tonight. Tonight means 5th May itself I will upload if possible, or at least 6th May morning 10 o'clock or 11 o'clock I will upload. Okay, capital gains, important adjustments across various heads of income. What are the important key observations, that I will upload. What are the points where students generally may do wrong, so that I will upload. That's it. I hope you're doing well. All the very best. Go ahead watching the marathon. I will come up in between this, and then I will do live only. I will schedule the timings within some 1 or 2 hours. I will schedule these timings also, and we will rock. Okay, that's it. Make use of those resources. I'm telling you guys, you will love it. It will be a fantastic revision for you. You will have lots of confidence. Okay, that's it. Take care.